My name's Suki Dehal from the Lloyds Bank franchise unit, and today I just want to spend a little bit of time speaking to you all about some of the things that we would recommend everyone considers when looking to invest in a franchise, and a bit of support on how to plan your business plan so that if you are seeking finance from your bank, you can maximise your probability of success in getting the finance you need to get into business that you're looking for. So just to start with, just wanted to cover off a little bit about why do banks like franchising? Because it's absolutely true that banks who have dedicated franchising units are keen to support business owners who are looking to invest into tried and tested proven franchising models. Banks take confidence from the fact that you'd be looking to invest in a business model that's been successful already under a franchisor's ownership and potentially under other franchisees' ownerships. So we can take confidence in your ability to replicate that success. The training that you will receive will really set you aside from independent businesses, because your initial training itself will help fill any gaps that you may have in your own skill set to, again, plug any areas that you might need to develop further, such as sales or marketing or people management. Again, some of the key skills that are needed for the chosen business you're going into. And then also on an ongoing basis as well, you're able to refine those skills to make sure that you're able to operate as successfully as possible. Naturally, within any network as well, you'll be able to leverage the economies of scale and take advantage of the buying power of being part of a larger group and having that brand recognition. Being part of that network will enable you and your fellow franchisees to secure better terms for supplies and to ensure there's uniformity from what's being sold across the network, but also your ability to grow quicker by having a recognised brand. By taking that on from day one will allow consumers to buy into a brand that they're trusting, which we notice does allow businesses to grow faster than independent. And finally, the market characteristics themselves. So the British Franchise Association conducts a survey on franchising, normally on a biannual basis. The most recent survey was completed in December 2018, and we look at various statistics from that. So it'll cover off the number of people going into franchising, what age groups, demographics, but also we do look at what commercial failure rates we see within the industry as well. The most recent survey, we saw commercial failure rates in franchising sitting at just under 2%, which when we compare to non-franchising and independent businesses, the most recent statistic we see is that typically 50% of independent businesses unfortunately do fail within their first 18 months of operation. In comparison, we're seeing just circa 2% in franchising, again, giving us confidence to look at supporting more people within franchising at our best possible terms, given the success that we've seen. But that sounds great, sounds very positive and rosy, but I do think it's really important that right from the offset to ask yourself the question, will it be right for you? Because naturally, as with all things, there will be positives and negatives and things for you to consider to make sure this sector would be right for you. The first question there, in terms of the skill set, do you have the right attributes and right skills? Now, your franchisors that you're speaking with, they'll normally be able to give you what they call their ideal candidate profile. That'll be their key skills that they see amongst their most successful franchisees. What you would need to do is really look at yourself honestly and look at your CV and see, can I demonstrate these skills? Have I been able to prove sales or a larger team management or whatever it might be? And look at seeing, can I be confident that I've got those skills? Because those would be what's needed for you to be able to replicate the success. Really, when you're doing your research, ask challenging questions, both of your franchisors that you're meeting, but also affiliates, so banks, accountants, solicitors. Make sure that you don't leave any stone unturned, because it's a big decision going into a franchise. You'd be signing up for a period of time. Make sure it's one that you're comfortable with and that you've not left any stone unturned when you're going through the questioning process. A big part of that research will be when you speak to existing franchisees. So it'll be really important for you to understand how has the support been delivered for fellow franchisees and what have they seen in terms of that business, what challenges have they had and how have they overcame them as well. Try and speak to a cross-section of the network. By all means, speak to high performers, successful, but try also speak to people who have been new entrants to the business as well and new franchisees and see how they've been able to grow their businesses in that short space of time. Now, franchisors will want to control that process. They won't just give you a list of all their franchisees for you to simply contact, but you should be able to go back and speak to as many as you want to until you are comfortable in making that investment. So again, try and speak to people from similar backgrounds, maybe to yourself, depending on what you've done to date in your working career. Again, it'll help you get an understanding of the skill set needed to be successful. A big part as well that we recommend prior to proceeding and going ahead would be, in terms of your franchise agreement, to ensure that it is checked by an accredited member of the British Franchise Association. So your franchise agreement is the document that binds you to following the system and processes of that franchisor for a period of time. Typically, the minimum would be 5 years, but sometimes it can be 10 or even 20 years, whereby you are committing to operate that business for that period of time in line with the franchisor's expectations. It's essential that you have that document checked and outlined and reviewed by a solicitor who can make clear to you exactly what those commitments are, both of yourself, but also of the franchisor. Typically, a franchise agreement will be naturally weighted in favour of the franchisor, and more often than not, they are non-negotiable. But it's important that you understand exactly what those commitments are so that you can ensure, is it realistic for yourself to commit to those? So I'm sure you do have a look at that with a solicitor before signing. As a bank, we do have a system in process whereby we have a fixed fee franchise agreement review service. So more than happy to share that with anybody on this call if you'd be interested in that. Looking further down the line there, in terms of family support, it's one that does often get neglected when I speak to potential investors who will tell me that, no, it's their business, it's got nothing to do with husband or wife, this is what's going to be separate, and they'll carry on in work. But again, it's important, especially if you are going into business for what could be the first time, that you have the support of your loved ones, because it's a big decision, and naturally it will be something that will take a lot of time to grow and nurture, and it needs to have the full understanding of your loved ones and yourself of the commitment that's going to take. What we want to make sure is that you're going into business in the best possible position where you can maximize your probability of success. Because naturally, as with any business opportunity, it's not without risk. There will always be some risk in any business opportunity that you're looking at. So ensure that you're mitigating these elements before going in to maximize your chances of being successful. And the final part there, in terms of can you afford it? So typically, most banks in franchising will look to lend anywhere between 50 to 70% of the total investment costs of your chosen franchise. So that will be when we look at the franchise fee, any working capital or equipment purchases. We'll look at everything all together to calculate what the total cost to get into business is. And then we would want a minimum of 30% of that to come from your own non-borrowed personal funds. So by that would be, as the name suggests, non-borrowed. So it would need to be from your savings or potentially realising some investments. But as a minimum, you would need 30% of the total costs, with banks looking to lend anywhere between 50 to 70, depending on the brand that you're looking at. So have a look and just see, can I comfortably look to commit that sort of level of funding and still have more funds left in reserve as well for contingency purposes? Ensure you're not going in with too much financial strains. If you're needing to use credit cards, personal loans to make that commitment, but the chances are it's probably not the right opportunity for you, because if you're going in overcommitted, would potentially hinder your growth. So have a look at your financial position and the brands that you're looking at to see how much is needed. And then by all means, speak to banks like myself to see how much can you raise for the chosen brand, and we can help look to shape your plans from there for you. A tool that we've developed to help your research is the Prospect Franchisee Training Certificate. So this is an online, completely free video-based program whereby you will see videos from franchise professionals in banking, in accountancy, legal, and franchisors looking to give you an overview of what is involved in becoming a franchisee. I'd certainly recommend, if you're new to franchising, to have a look at this to get a feel for what's to be expected of you as a prospective franchisee when you meet with that franchisor. Because quite often, it's a two-way evaluation process. You as the prospective investor will be evaluating different franchise models, but franchisors will also be evaluating you and looking to see, would you be the right for their brand? So upskilling yourself on the sector and what's expected of you is really important when going into these meetings. And Certainly, as I say, completely free video-based training modules to cover off elements like understanding financial accounts, understanding a franchise agreement, and looking at the wider franchising sector as a whole. Makes it a really important tool as part of your research stage, and it's available just at that link there. As I say, you can register completely free. You've done all that. Once you've done all your research, you're happy with the brand you're looking to go forward with, one of the first documents your franchisor will ask you to create is your business plan. Now, the business plan, it's important because a lot of people will say it's needed because the bank won't lend me money without it. And yes, whilst that's true, and it's part of any lending application with the bank, we firmly believe that shouldn't be its sole purpose. Your business plan should be a working document. At the very least, it should be updated at least once a year, because in business, once you open the doors, things will change in your landscape. You'll have new competitors enter into the marketplace. You'll have changes in consumer demands. If we look now at the way in the current world with COVID-19, we have changes to the way we are even able to operate with social distancing. Your business plan is your roadmap to success. It's how you're going to evaluate your ability to maximize those opportunities and how you're going to operate successfully, which is why it needs to be updated and reflecting those changes both in the landscape, but also in your opportunities as well. Small plea from me, though, as a bank manager, is be mindful how long they are, because we've got to read them. I've had plans in the past that have been in excess of 250 pages long. It's telling me all about where franchisors first started and grew up and before they even got into business. It's completely irrelevant. If you're speaking to a bank like ourselves who has a franchise unit, we will know about the franchisors and the businesses you're investing in. What we want to know about is you. We want it to be kept relevant and punchy to you and your business, your experiences, your competition and marketplace, keeping it really focused on your business rather than too much in depth about the history of the franchisor, because it's superfluous, in all honesty, at that stage there. But when you do approach banks and financiers, don't be surprised if you're challenged on that business plan. Now, it's not to catch you out. What banks want to do is make sure we can be confident of your ability to deliver the business plan that you provided to us on paper. So some of the common challenges that we will ask during a lending process may be things like, if interest rates went up to 5%, what would that do to your ability to repay your borrowing from year 2 onwards? We may also ask, if your break-even point was pushed back by 6 months, would your cash flow be able to sustain that hit? Those are just some of the common stress tests that we would look to ask. Again, just to ensure that you have an understanding of both the financial aspects of the business and the general operational plan as well, because we want to ensure that you can deliver that plan successfully and confidently. So ensure that you've planned for these sort of scenarios when you meet with bank managers so that you can answer confidently and again, maximize your chances of gaining that finance successfully. Now, I've gone through a few of the key areas here that I think any good business plan should contain. I've also included a link at the bottom there, which contains a template from Lloyds Bank of a full business plan. Typically, most franchisors will have their own templates that when you go through their process, they'll be able to share with you to help you create your business plan later down the line. By all means, I'd be happy to send a template to anyone that would like ours as well to support. But I won't go through all of these because some of these are self-explanatory, but some of the ones that I will pick out for specific mention and focus. Firstly, in terms of the market research and the competitor analysis. Now, again, as I touched on earlier, this is really important in part of what bespokes your business plan and your ability to mitigate the risks in your area. Have a look at seeing what is your opportunity, because to do that, you'll need to understand the demographics of your territory and how many of your own prospective clients are within your area. The competition analysis, it's always interesting. When I talk to investors, a lot of franchisees almost feel afraid to tell the banks that there's competition in their area because they think we'll look at it negatively or judge it negatively. But quite honestly, in today's day and age, part of our assessment process is that we will look online at different providers in your area within a 10-mile radius, because it's information that's available so readily to us. What we want to see is, have you considered that, and have you recognized what's your USP that's going to differentiate yourself from these competitors? And equally, how many other competitors are there? Because it will give you an idea of demand for your services. So acknowledging them is important. Acknowledging their strengths and weaknesses and where you sit in that marketplace is essential, because we'll be able to research exactly and find out who's there anyway and ask you that question if it hasn't been addressed. In terms of other aspects, your own background, again, we touched on earlier, why are you going to be successful in that business? We're going to want to know to date, how have you been successful in either your business life or working life, and what skills have gotten you to that success? So outline that out in your business plan as well, again, to give us confidence of how you're going to operate the business successfully. And further down the line, we have also added in terms of what adaptations has the business made through COVID-19. So it's a big part of any lending application now that we are receiving from prospective investors, is we're asking to understand if the business has reopened, how has it reopened, and how has that affected the financial aspects of that business? Is it now operating at a reduced capacity, potentially? If so, what has that done to the financial margins? Or have there now been new adaptations such as increased PPE costs that need to be taken into consideration? Look at making sure if any plan in the short term is outlining exactly how the business has adapted, and equally moving forward whilst adhering to social distancing, how can that business be adapted to be successful over the coming months as well? So ensure those elements are marked off during your business planning stage before meeting with banks and prospective investors, because we're going to want to go through those elements with you. So in terms of raising the finance itself, in the first instance, I'd certainly recommend, if you're looking to finance a franchise purchase, approach the bank's franchise department. Now, not all banks have franchise units. The main ones that would have in the UK are ourselves, Lloyds, HSBC, NatWest, and Barclays Bank, who have dedicated franchise units. Now, you may already have relationships with local bank managers in your area, business plan on areas that it shouldn't be. Speak to the franchise departments, because they will know the brands you're speaking to and will have packages already defined for all the different brands available in the UK. We've mentioned already in terms of how much you can borrow. So typically that would be a range of between 50 to 70% of the total investments. So in terms of that lending, that can be a combination of term loans, which are normally utilised for larger costs associated with getting into business. So your franchise fee or any equipment purchases, typically we would look to lend those on a term loan that would match the term of the franchise agreement, whether that be 5 or 10 years. We would look to lend the money on that basis. Sometimes for your working capital element, so if you do have an amount that's needed to get the business up to its break-even point, we can look at supporting via an overdraft facility or via via debtor finance, depending on the business as well. Key there is speak to your bank about what makeup of products would be right for the business you're looking to go into, and we can help you shape your business plan appropriately there. One of the big considerations as well would be the potential for security. So typically different banks do have different levels that they will lend to on an unsecured basis. For Lloyds Bank currently, it would be up to an amount of £25,000. So if we are looking to lend up to £25,000, we'd be happy to consider that on an unsecured basis with just a personal guarantee if you're a limited company. Above that level, we would then have the discussion with yourselves about what potential security that you would have available to offer as collateral against the borrowing that you're looking to take out. Typically, what we would look at in the first instance would be what property is owned with equity available to secure against the borrowing. Now, historically, we were able to use the government's Enterprise Finance Guarantee Scheme, which was a government scheme enabled to help people to get into business when you didn't have the necessary security but had the right skill set. However, that scheme is currently on hold at the very least until November of this year, whilst the government's other lending initiatives are in operation. So the Coronavirus Business Interruption Lending Scheme and the Bounce Back Lending Scheme. Both of those products are going to be here until October. And during that time, the EFG scheme has been pulled. So right now at the moment, the bank would be able to have a look at either unsecured borrowing up to 25,000 or secured borrowing above that. So ensure you've made those considerations if you're looking at going into business at this stage, because those would be the two routes that banks can look at for funding your business ambitions. But as I say, speak to the banks in the franchise units so you can look at going through your plans and shaping those appropriately to maximise your chances of being successful. So in summary, I can see there's a few questions I'll get to very shortly as well, but as I say, really thoroughly research your options. Franchising does have pros and cons, as any business opportunity will have. And as I say, it's not without risk. Any business opportunity will have risk. So make sure you're comfortable with the investment and that you've researched as much as you need to before going ahead. Lloyds has a free guide that we have produced that I'm happy to share out to anyone, which contains key questions to make sure you're asking your franchisor. So by all means, happy to send that to anyone who would like me to. But ensure that you're seeking professional advice and support from accredited British Franchise Association affiliates, whether that be banks, solicitors, accountants. Speak to the professionals who understand the sector you're looking to go into. And the final aspect there is, don't overstretch yourself. Be really realistic in terms of what financial commitment you need to make to get into the business you're looking at, and ensure that it's not going to put too much strain on either the personal or the business finances. As naturally, both will be intertwined if you're going into business, and we want to make sure you're not going to be hamstrung on either side. That could hinder your business's ability to grow successfully. That is all of the questions I wanted to go through today. If I just have a look at the Q&A, here's where I see if I can get the chat to work correctly. Right. There's a couple of people who wanted to see the Train Me link again. Not a problem at all. I'll get that up now. Back. So there's the Prospect Franchisee Training Certificate there. So bfa.trainme.tv. So we've got a question here in terms of, besides the BFA, where would be a good place to find other reports related to franchising as an industry? And are there any other available materials I'd recommend to learn about how to be successful as a franchisor? In terms of other sources, I can certainly share different sources of online publications where there are different articles from successful franchisors and franchisees. I can certainly share that. So the likes of Global Franchise, What Franchise, Which Franchise. There's different independent sources rather than the BFA as the regulated body. But yes, there's many other websites in that respect for franchising, which I say I can share links to those as well. Another question that we've got from Aidan is, what ongoing scrutiny and support to ensure the business plan is being adhered to once franchisees secured funding? Often plans are ignored once they have secured funding. Absolutely, Aidan. I think, as I mentioned, that there is the understanding from a lot of people that they only need it for funding and then it's put away in the bottom drawer. In terms of ongoing scrutiny, now the banks don't generally have an ongoing process to review your business plan, unless we can, in some instances with some lending, actually tailor in different review points down the line. But typically we wouldn't, most lending that we would agree, we would review it at the start, but we would expect you as the franchisee and the franchisor to look to implement those review points, I'd say at least on an annual basis. We would want you to undergo that review with your franchisor to ensure that you're going to be successful, because naturally it would be in your best interest as a franchisee that you're maximising that opportunity. But you're absolutely right. Often I know they are ignored sometimes after funding secured, but it can be a bit of an own goal from my perspective, where people aren't maximising their success rates by not reviewing it more often. Bruce is asking, typically how long a process for issuing funds would take. So issuing of the funds will depend on the security. So if we're looking at unsecured lending up to £25,000, typically from start to finish, you'd be looking at around about 2 to 3 weeks in total. So we would look to review your business plan, open your business account, and then issue your loan paperwork before it's released. If we're looking at your secured lending, so if you are looking to secure against property, typically then you would be looking at anywhere between 10 to 12 weeks in total. The additional time there would be needed because we'd need to value the property with sending out a bank approved valuer to whichever property is being used as security. But also, not only that, you would then need to engage with your solicitor to put the legal charge in place and to conduct local searches, etc. So typical estimate there is anywhere between 10 to 12 weeks. At this moment in time right now, that would be slightly longer by another fortnight due to the elongated process to open a new business bank account currently, whilst we are in lockdown. as a bank, we have an increased time frame to actually get your bank account open. So I would say now at this stage to allow anywhere between 12 to 14 weeks for any secured lending application, for any unsecured lending application to allow 3 to 4 weeks in total at the moment to be able to look to get those funds drawn down. In terms of repayment holidays for the new business startups, so we do offer them, but it does depend on the business you're going into, because we don't offer them across the board. They are offered for specific sectors whereby they are deemed to be necessary. So businesses whereby your first year will be a significantly loss-making position and you need to build up your capital. So if I was to say potentially something like in the domiciliary care industry, whereby you need to build up your client base, we would be able to look at capital repayment holidays. But it does vary from brand to brand and from sector to sector. So I'd be more than happy to pick up on a one-on-one basis, Bruce, in terms of the brands you're looking at. And I can go through, because the capital repayment holidays can be anywhere from 3 months up to 18 months, again, depending on the business that you're looking at. The final question from Julian in terms of what is the BFA certificate, it's just on screen as well at the moment, the Prospect Franchisee certificate. It's a completely free online training program whereby you complete video-based modules and different aspects of franchising. And what you'd have at the end of each thing is a Q&A as well to ensure that the knowledge is tested and be issued with Prospect Franchisee certificate at the end of that, confirming that your completion. Most franchisors who are BFA members are aware of the certificate. And again, it'll give them confidence that you've done full research on the sector before going into franchising. I've got a question here from Danielle. If you're searching for premises to avoid delaying the submission of a business plan, is it better to submit the paperwork to the bank with the franchisee's max budget? I would say probably not as much as just submitting it on a maximum, because what we would need to do when we're going through the application is look at what is likely to be realistic. So what we normally would do is, if you've got a property in mind, we're still negotiating, we would look to do the plan at the first stage of agreement principle, what you expect those terms to be. And then what we would do is work together with you to see what sort of leeway is there in that business plan. If there is leeway to go slightly up or slightly down, we'd look to discuss that first. But we would want your business plan to be as accurate as possible, rather than just being up to the maximum budget. Because typically what we would do is we would look to provide your agreement in principle and then take it on to a full sanction further down the line as well. So rather than automatically bring it down, try and keep it as close as accurate first, and then further down the line we would request to view your heads of terms, so with your lease as well, so we could confirm that further down the line. So I'd say try and keep it as accurate as possible, and then we'll solidify it down the line, but engage with the bank first to make sure there is leeway in the first instance as well. We've got Aidan working as a project manager for Action Coach and work 90-day plans for clients. Great to hear. It's important, and I can't stress it enough, and make no apologies for repeating about the importance of the business plan and making sure that people do keep on top of it, because quite often they're not. And like one of our colleagues said earlier here, they are ignored after the funding stage, and it's detrimental to the business. I think this is what the pandemic situation has really shown as well, is the importance of being able to manage cash flow forecasting, being able to pivot and being agile enough to change your business has been essential to businesses that we've seen being successful during this pandemic, who've been able to adapt and had good handles on their finances. So the importance of the business plan was really intensified in most recent months when we've looked at finance applications for pandemic-related funding. One question left from Julian: if I go for an industry without previous experience, what do I think? Absolutely. That's one of the beauties of franchising, whereby you don't necessarily need industry-specific experience. It's the transferable skills that quite often franchisors are looking for. Because you're relying on your franchisor's industry knowledge, what you'd be bringing to the table would be your own transferable skill set, whether it be sales, marketing, etc. So absolutely, that's something that we do see frequently. It does depend. Some brands want industry-specific experience, but quite often most won't call for that. So it's certainly something you're welcome to look at, Julian. In terms of typical interest rates on term loans, Currently, at the moment, whilst we are in our current COVID-19 scenario, we have a cap on all of our term lending, whereby the maximum pricing is 5% above base rate. So base rate currently sitting at 0.1%. Our highest pricing would be at 5%. Depending on the amount you borrow, so typically the more you borrow, and if it is secured, would help reduce that interest rate. If we're looking at secured money, hypothetically, if we're looking at securing £100,000 over a 10-year term, you'd be looking at roughly around about 2.5% above the base rate. So that's effectively a range anywhere between 2.5% to 5% above base rate currently. This is the pricing structure. Typically for secured lending, you would also have an arrangement fee, which is worked out at 1.5% of however much you borrow. That would only be applicable for lending above £25,000, which is on a secured basis. And that fee can then also be added onto the loan or can be settled separately upfront if you wanted to. Be entirely up to yourself. Brilliant. Well,
Thanks very much, Suki. Thanks for your talk today, and thank you everybody for coming. A great 54 people at one point, which was really good. So thank you very much, and we will see you all soon. Goodbye.
Fantastic. Thank you very much, everyone. Bye-bye.